Well, hey, everyone. Another week of Loom posts. Yep, another topic. Today, we're going to talk about how do we keep up with market volatility? How do I personally cope with such volatility? Yep. So, just a reminder, in case you don't know me, my name is Warren Howe. I am a coach in Financial Fortress, and I also run my own coaching programs here in Malaysia. If you're interested, please, if you're serious in the market, if you're interested, do contact the relevant teams. Yep. I am a full-time investor. I have a diversified asset portfolio of properties, private businesses, and stocks. What I do normally is that I apply my strategies in my private businesses as a business owner in stocks. Yep, because stocks is essentially reading a business. I'm also I also run a family office and a seven-figure portfolio here in Malaysia. Yep. So yeah, let's get to the topic at hand. We're going to talk about how do I personally cope up with market volatility. Yeah, because a lot of my members, a lot of my clients, they tend to ask me, Warren, the market is going bad, right? Did you cry last week? Did you cry last week, or did how do you treat your portfolio? How was your portfolio? I tell them my hand is as steady as a rock, right? So why do I say that? Because how I personally cope up with volatility is we need to assess every single thing that comes to us. Yeah, what does that mean? It means that we need to assess, everything is interrelated, guys. Okay? We need to assess our own financial standing. Yep. So when I talk about that, what do I mean? I mean that we need to have a stand as to where are we, how much do we have, right? How much is our net worth? What are the baskets that we're putting at? Whether or not we have what I call investable liquid net worth, plus having a room for emergency funds, not touching them, having a room for cash, having a room for savings. Yep. So the typical idea is to have 6 months of emergency funds. That means how much are you spending a month? Yeah. If you work that out, you work, and you should work out your expenses, right? Because that's the first thing. To be control of your life is to have financial standing, is to know where you want to be, right? So this is portfolio allocation, this is net worth allocation, and that paired with a portfolio goal 5 years later. Yeah. So always have 6 months to 1 year of emergency funds, because that will give you the flexibility and not having that stress if should there be a market crash. Yep. So that's number one. Knowing your financial standing. Yep. Having that ability of cash. Yep. Assessing your liquidity. Okay. Step number two is basically to understand what is happening in the market. Yep. Understand what is happening. Is it volatile based on the Feds? Is it volatile based on interest rates? Due to COVID? Due to wars? Every time, and there's in within a year, there are always excuses, always reasons why the market will drop. What does this mean for the market? We always have to ask ourselves, what does this mean for the company that we are investing in? So you see here a stock price chart of Tesla. Yep, I've been holding Tesla since years back. I've been losing out on my gains, right? That means on paper, I have not sold a single share. I've been losing out. I've been reinvesting. I've been buying. So every time you see a bear coming down, now obviously this is an obvious bear because of COVID, right? But every time there's a reason for this stock to go down. Either they didn't impress during Battery Investor Day, they didn't impress investors, analysts, Wall Street, right? What is our judgment based on this business? Yeah. So let's say there's a market crash. Yeah. For example, huge one on during 2020, right? From the highs of pre-split of 184, dropping down all the way to 75. Yeah. What goes through your mind whenever you see that huge 30% flop? What goes through your mind? How do I cope with it? I cope with it in a way that I know that my savings are intact. I know that I'm able to live. I'm not just, depending on stocks. I'm having a good, cash inflow from my 9 to 5, but now I'm full-time, right? I'm talking about everyone else. Are you having a good cash inflow from your job? from your side hustles, whatever it is. That's number one. That's a perfect example, right? Number two is that I understand Tesla. I've been holding back since 2 years ago. They have gone through the worst times. Yep, they have gone through the worst times. Things are only going to get better from here. The next thing to worry me is about whether or not they can be bankrupt, right? Whether or not they will be bankrupt based on everything that that I know that they have. How many gigafactories do they have? What is their cash burn every month? What is their cash in the balance sheet? Yep, can they even expand? Will there still be demand? These are the questions that we should be asking ourselves. And this is how I cope with volatility, because I read it as a business. In other words, also, when we talk about portfolio allocation, we also need to, that's why net worth is important, right? Other than studying a business, net worth is important because we need to know the basket of stocks. How many percent of it will affect your whole net worth? Will it go to zero because you're 80% in stocks? That's insane. So we need to know how to diversify ourselves and whether or not we can stomach that volatility, knowing that if a Tesla drops 30%, how many percent will that affect the whole portfolio? Yep. So what did I talk about here in summary? Financial standing, your portfolio strategy, knowing more about yourself, right? It is always hard to do, right? Bruce Lee, he said that knowing oneself is the hardest thing to do, and that is so true because we need to know ourselves. We can't lie to ourselves, right? That, okay, this is me. I'm more aggressive. I'm more in stocks. I'm lesser in properties. I'm lesser in bonds. Yep. Knowing yourself will actually help you to gauge, okay, this is what I need to do, and I'm okay with Tesla losing 30%. Because if that does, I got a buy plan to be buying more. Again, I'm not a financial advisor. Don't take my advice on just Tesla, but these are perfect examples what I do to cope with volatility. Yep, so I hope you got some value out of this, and I'll see you in the next one. Thank you.